Bitcoin and stocks are going to crash due to the recession, or is this the bottom and we're going to have a bounce here? Look how crazy this situation is right now, folks. This is where I expected Bitcoin to be. There's good news and bad news. I've been keep on talking about this 109K area, which is, we even went a little bit below, right? Which is the good news. It hit my target. I said, it's going to wick through. I didn't believe this bounce. I said, look, I think we're going to wake through, right? In my last 2 or 3 videos. But the bad news is there's no wick. It's just staying solidly below here, right? And we're like maybe an hour away from closing, right? So the bad news is this line has been solidly broken. Major support line, I don't think anyone can argue with that, has been solidly broken. Let me put it on a logarithm, right? On a daily basis. On a daily basis. We need at least a couple of days to confirm. And then because crypto is so tricky, it can still wick like what they call a fake out and go back above. In today's episode, right, we're going to talk about is the altcoin season dead, and is the crypto bull market dead? One thing I will say about it is this. Have a look at this. So this may not look so bad. This may not look so bad. This is the SP 500, and I think folks should know by now how important the SP 500 is in its correlation to Bitcoin. I mean, this is when Bitcoin bottomed, right? April 7th. That's when SP 500 bottomed and let the bull run. If SP 500 keeps on running, then I think Bitcoin will be okay. So just a quick recap, what caused this total dump today? What caused all of this today? Well, what caused it today is because the knee-jerk reaction to the economic data. GDP for second quarter revised to 3.8%. That's an amazing economy, almost 4%, right? But here's the thing. Here's the kicker. Last quarter one of 2025 was only minus 0.5%. So it was negative. We're in recession territory, right? You need 2 quarters, but anyways, first quarter was minus 0.5%, and in second quarter we swing around for a 3.8% gain. 3.8% gain. Okay, durable goods, right? Down. Market was expecting down negative 0.3%, but the orders are up 3%. Right, that's very strong economy. Jobs, the market is expecting 233K. Jobless claims, people without jobs, only 218K. People are expecting 2.5% core PCE, right, prices for quarter 2, but turned out to be 2.6%. Right, so prices, inflation was higher than expected. Here, inflations were high expected. But here's the thing, folks. I really want to emphasize this. These are quarter two numbers, right? Which means right now we're September 25th, 26th, 27th, around there here. Late September, so this is basically like end of September, which is almost the end of third quarter. And they're giving us these Q2 numbers, so they're meaningless. These are numbers between April to June. April, May, June are quarter 2, right? They're really meaningless, right? Even though that's the final figure that came in and there's a delay, there's a lag. Quarter 2, this is April, May, June. And back then, they were still fighting trade wars, tariff wars with China and Vietnam and all the Europe, all these countries. So, nevertheless, the market saw this and the market panicked in the short term, and the market thought, okay, no rate cuts. We're not going to get any rate cuts in the short term. Here is the NASDAQ. NASDAQ also did this pattern, right? I would call this, see this wick here? I would call this a bottoming tail. And have a look at the rate cut expectations. Look at this, now 14.5% chance of rates being on hold. That's why the market is panicking. But is it all panic? Is crypto bull run over? Are the stocks bull run over? Before we answer those questions, first let's answer the question of which crypto exchange does Pablo use? Pablo uses exchange that's non-KYC. That means you don't need to show any ID. that means even the exchange can't see who you are. So therefore, the IRS can't see you. The tax office can't see you. FBI, CIA, nobody can see you. So here, join Pablo on this link only, an exclusive, right? Win up to 120,000 USDT, right? In prizes. So get 20% bonus just by depositing. Deposit $100 US, get $20 US bonus. Deposit $1,000 US, get $200 US bonus. And you can see just by being the top 30, right, you get to win a prize. Now, this offer ends on October 16th, limited time only, October 16th, limited time only. And if you're watching this on YouTube right now, then the link is in the description below. The link is in the description below. But on any other platform, that's okay. Just like this one, just click on my profile page and there is my link tree or Stan link. We click on that and it's the first deal that pops up. Okay, let's get back to the markets, folks. And remember, this deal finishes on October 16th and it is only on the Pablo Himen link. Only on the Pablo Himen link. So here is basically where the stock market is. And you know what? This is what I would call a bottoming tail, right? These signals are not 100% accurate, but sometimes they do work. Like I would say 50, 60% of the time they work. Here is a bottoming tail because you have a long wick down here. It basically means the market panicked, sold, and someone came in, buy, and bought all the way here, right? Here marked the bottom, right? You can see here marked a panic sell bottom, right? You can see here marked a panic sell bottom. This is the NASDAQ index I'm looking at, by the way. Here, panic sell bottom, right? And not quite for April the 7th, right? I wouldn't call that a bottoming tail because the wick is not quite strong enough. But we've seen enough evidence of how well this signal works. So I'm giving you guys the technical. Look, this is on the SPY, on the SP 500. This is obviously, as we can see, another bottoming tail here. Bottoming tail. So we go up. Kind of a bottoming tail, we go up. Bottoming tail, we go up. Not quite, but bottoming tail, we go up. And bottoming tail, we go up. And here, not quite a bottoming tail. But let me put it on the weekly chart to see if this works on the weekly or not. For that key, April, not quite either. We don't have a bottoming tail here either. Monthly maybe? Okay, monthly, okay. Monthly, here's a bottoming tail in April. So May, June, July, August, September. We're about to end September in like, what? In like 3 days and 4 days. And we've had 1, 2, 3, 4, 5 months of green. So these bottoming tails tend to work, but we can't rely 100% on them. Now, more than that, I would actually call this a island reversal pattern. Why is it called an island reversal pattern? Because there's a gap here. See how this was 659.67. It closed yesterday and it opened today at 659.34, like a tiny gap, not huge, but a tiny gap. It gapped down, right, and then basically closed up. Tomorrow, if it gaps up and goes up, then there's a gap between yesterday and tomorrow. So that would be what we call an island reversal, because it's an island on its own. The prices are not linked. On the weekly, let's see, on the weekly, look, on the weekly, if tomorrow, if we have a positive day and get back to 660, then this would be a doji pattern. And once we have a doji, we can still move up. So, look, that's the technical side, folks, but then you have to wonder, what is the fundamental side? The fundamental side is the PCE numbers that's coming out tomorrow. As I've been telling you guys, tomorrow we have Friday in the US time. We basically have the core PCE month on month is expected to be 0.2%. Core PCE year on year expected to be 2.8%. And if we come in on expectations, just on expectations for both of those, I think markets should reverse. Stocks should go up and bottom here and go up. But, if they come in worse than expected and there's inflation, then I do think we can go down a bit more. So it depends on, I've shown you the technical, and I've also spoken to you through the fundamentals. So it depends on the fundamentals tomorrow. But in the meantime, here is basically the Fed watch, as we've seen here. Now they're pricing 15%, 14.5% chance of no rate cut. And keep in mind, folks, just 1 week ago, this is 1 week ago, see, 1 week ago, they were saying there's zero chance that rates are going to be on hold. There's, 8% chance we will have one rate cut, and 90% chance, actually, that's 0% chance we were going to be having no rate cuts, and we've had that rate cut since then. So that's the current situation we're in right now. They were saying 8% no rate cut, and now we've jumped to 14.5% chance of no rate cut. And look, once again, it just depends on the data we get on Friday, which is the US PCE core inflation data, and that's really the most important data that Fed looks at. Overall, look, I don't think this is bad news. I don't think this is bad news that the Fed is not, that the economy is strong. I know they're not cutting rates, but people are worried about recession like myself. I've been worried about this recession coming at the end of the year. And if economy is really strong, right? If all these figures show economy is really strong, then this recession could be delayed once again. Right? And that's kind of good news in the medium term, because that means the stock market can keep going up for another 3 or 4 months, right? So here, let's have a quick look here of what's happening to the crypto market, the altcoins market. Before we do, let's have a look at Ethereum. So basically, we saw where Bitcoin is. Bitcoin needs to bounce and hold above that 110K area. And here's ETH. For ETH, I've been speaking about this in my Discord and in these videos. Folks have seen it. I said basically, I think we're going to wick below here, but we really need to hold this line, which is in this low to mid 3,900 area, which is essentially here. So far, we've held this line, but it's not looking good because we're not having a bottoming tail here. There's no wick here, but at least it's come and hit my target in this 3,900s area, which is this this large supporting trend line. What about altcoins, right? What about altcoins? Altcoins, basically, look, this was the all-time high, 1.7 trillion back in 2021. This is the all-time high. We've almost hit again 1.65 trillion in December, as soon as Trump got elected. And then the crash to April 7th with the whole trade war deal and stuff. And now bounce. And we hit 1.74 trillion again, slightly above a new all-time high, but we couldn't close above there. And now we've pulled back, right? We've pulled back to this area, 1.47 trillion. But you know what? We really need to hold this 1.45 to 1.47 trillion area. That's the major support. Why is that? Because look, this May 2021 top was here. This August 2021 top was here. So we have two tops here and a bunch of tops here, right? 4 or 5 weekly tops here in Jan 2025, and now here. There's a chance we could bounce off that 1.45 T area, but the thing is, we could go down even lower. So I'll show you the next level of support. It's naturally around this area, 1.26 trillion. Why? Because one, it is This rising trend line, which has carried Ethereum all the way since what? Since around this period, which is August 2023. That's 2 years. So the last 2 years, we bounced off this trend line, bounced off, wicked below, bounced again, and now we could hit here. That's bad news if we were to hit there. Not only is this red trend line working and it's provided support for Ethereum all this time, but also look at this blue trend line, 1.27 trillion. It's basically the major resistance to the right shoulder to Ethereum breakdown here in March 2022, and it's also the top of March 24, and also the top to May 2025 this year. So basically, I am still looking for Ethereum to bounce. Look, this is obviously some sort of major historical all-time high. We flirted with it. I think we flirt with it once again before we break through for a blow off top. Here, I think it's gonna freak everybody out by doing a wick through here. Wick through. I'll say that again. Right? We hit this area. We wick through to like 1.36 trillion, and then close back on the support here, and then go up. Something like that is, I think, the most likely scenario. I mean, look, these historical all-time highs are really difficult to break. That's just how it is. So we've had one attempt, two attempt, and I still see a cup and handle pattern forming. This is a cup, and here's the handle. And essentially, this is a cup and handle within a cup and handle. See how here we have another cup and handle, right? That's cup and handle inside this much larger cup and handle, right? Handle. Now, the thing is, why is Ethereum or any other stock or crypto so sensitive to these key all-time high areas? Have a look at this. This was the 2017 bull run, 2018 bull run, when Bitcoin topped at this, when crypto total market cap, this is altcoins, topped at this 436 billion, 440 billion dollar area. See in the 2022, right? Bear market, 4.5 years later, we bounce off 440, we bounce off 440, we bounce off 440 once again, and that was the bottom, and altcoins take off. See here, right? Right, 440, 450. The top here became the bottom here. So these levels of all-time highs are highly, highly respected. So that is why I think this level is going to be significant. And, we bounce off again, but smaller this time, maybe to 1.3536 T, and boom, up we go again. So that's just my thinking, and that's how I'm playing it. One more thing I should remind you guys. So what do we think? What do we think is the US economy in recession, or is the US economy really healthy? Has Pablo been wrong about the US recession so far? Why don't we have a look at very close look at this chart, and you tell me what you think is happening. Okay, the blue line here is the real US GDP growth. Is the US GDP actually expanding? The light blue line here is US GDP if we do not include tech spending. So first of all, the blue line and the light blue line travel together. See how they basically travel together? They don't really break apart, right? They travel together. This part got broken because I think it's basically the COVID era, right? So see how they travel together, right? So right now we should be saying, because we saw, as I showed you at the start of this video, that US GDP is really strong right now, we should be seeing US GDP really strong right now. And like 3.8% somewhere up here, right? So, but here's the problem. The total GDP, which we saw, was really strong. But if we do not include tech spending, then it's near zero. It's like less than 1% or near zero, right? Hovering around recession levels. What does this mean? What does this mean? All this time, since 2010 on this chart, all this time, basically real GDP, right? Real GDP and including tech spending are basically, or not, even if you don't include tech spending, are basically same number. They go up and down together. But in the last year or so, right, tech spending makes up like 1.5% of GDP. See this gap here. And if we don't include tech spending, then GDP is much lower. The real GDP is much lower. So if we add tech spending, then we get back up to here, around 3% and now 3.8%. Why is that? Well, unless you've been living under a rock, right now, everybody's talking about AI. And what they mean by tech spending, 95% of that is basically building AI cloud computing centers, AI cloud data centers. That's why Oracle has shot up 30% in one day, right? Like 2 weeks ago. So if we don't include the AI data center, cloud computing center, data center spending, then basically US economy is basically here, kind of close to recession or almost at recession. If we include the US data spending, then we're fine, we're here. So what does this mean? This basically means that right now, everything, it depends on the entire stock market, the entire GDP depends on this AI narrative. If this AI narrative pays off, and if ChatGPT, OpenAI can actually get paid like $250 billion a year, even $150 billion a year from their AI income, which they're not, then basically the US GDP and the US stock market can hold up. It's a gamble, right? But if DeepSeek comes out with a new model called R2, and proves that you don't need all that computing power, you don't need all those AI cloud computing centers, then Nvidia crashes, NASDAQ crashes, and this whole narrative of the US GDP growth crashes. Think about the logic of what I'm saying here. Thank you for tuning in, folks. I'll keep you guys updated for the next episode.